Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Foreign exchange market is a litmus paper of the system. It's been very important. We saw the whiplash yesterday. We had a great story out in the Bloomberg. Thank you, Ted Mann, Liz Capel-McCormick, and Esha Day for a really sharp article about the roller coaster, they call it, that we saw in dollar dynamics yesterday. Right now, we recalibrate with Barclays. And there's Skylar Montgomery-Koning, their FX strategist out of the United Kingdom. Skylar, good morning. Can Barclays bet resilient and strong dollar, or do you adjust on this Tuesday?
I don't think we've heard anything in the last couple of days to really adjust our view. I think broadly it's accepted that the current environment is dollar positive. We've had such a large move that the question we're consistently getting from clients is, how far can this strength extend? And for us, we wouldn't fade the dollar strength, and particularly with reference to euro dollar. The move we've seen, it's not been exclusively driven by tariffs, right? It's also been by growth and rate differentials. US growth continues to be stronger than its DXY counterparts, and that's meant higher yields in the US than elsewhere, and that's also played a role here. So it's not just tariff threats alone that point to more dollar upside.
Skylar, I mean, I'm looking at the Bloomberg Dollar Index up over 7% just since late September, call it. Is there a bear case for the US dollar?
So we get asked this quite a lot as well, kind of what are the reasons or catalysts that you could see for dollar downside? And certainly there are options, right? You know, there's not a complete regardless of that in terms of you could see more fiscal cohesion in Europe. That would be more positive. If you got more supersized stimulus out of China, that would also be more positive. If you just had less hawkishness on trade, again, that would be more positive for those DXY counterparts. I think the issue is just none of those baselines are coming through, and they're certainly not our baseline.
How about in Asia here? What is the Bank of Japan doing? What do they need to do? How do you guys think about the yen here?
Yeah, absolutely. So for the yen, its near-term upside seems more limited, especially versus the dollar. The January Bank of Japan meeting, it's pretty much completely priced in for a 25 basis point hike. I think topside in dollar yen at some point, you get some kind of cap because of Japanese authorities' reaction function to FX weakness. But given we've had this spate of yen strength recently, we're not quite at levels where that comes into the picture. More medium term, though, we do like buying yen on the crosses. I think the direction of policy is clear. Obviously, we're expecting a hike this week, but we also expect a hike later in this year. That gets due to a policy rate of 0.75%. And certainly neutral expectations for Japan are kind of drifting more towards the 1% level in markets. And then they're also less vulnerable to tariff risks. And the volatility of a trade war could be more positive for safe havens too.
Is there a big figure trade out there? I mean, forget about all the 60,000 feet stuff. Tyler, I lost money on the Detroit Lions. I know. I mean, it's like losing money on Man U. No, it's not. It's like losing money on somebody good. But the answer is, I got to make it back in the next 6 months. Skylar, where's the big figure bet for Barclays?
I mean, in terms of places that you'll get the largest move, I think CNY is where you should be looking, especially versus the dollar. There's been a mispricing in terms of where tariff risk is really showing up. It's showing up in Europe so far, but not so much in China. And the growth backdrop, as well as just fundamentally the backdrop for CNY, is for a weaker CNY, even if you don't account for tariff threats. And so that tariff threat should be more reflected in that cross. And for us, we're looking at 750 originally on dollar CNY.
Wow.
How about we've had, just in the last 24 hours, Skylar, a pretty clear commentary out of the new administration about tariffs on Mexico and Canada. How do you play that in the currency markets? Do you, in fact, trade that? You try to set it aside? How do you think about that?
I mean, I think you have to trade it. You have to seriously take these threats under consideration. Canada and Mexico are very exposed to the U.S. in a relative way. So 75% of Canadian exports go to the U.S. It's not reciprocal by any means. And most of Canadian GDP, or a significant portion of it at least, is generated by those exports. And so it's much more worrying for those economies that you have the threat of tariffs, and that supersedes anything else that you have domestically. But domestically, particularly in Canada, the backdrop's not great either. You're in a period where Parliament's prorogued.
Right.
There's not a lot of political legitimacy behind the current government, and that is an opportunity for Trump, I think.
Skylar, what's the shadow out there for dollar certitude? Unfortunately, Paul was away on a sabbatical, and I was inflicted Damien Sassower upon me, Skylar. And of course, he's EM, 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 EIEIO. What's the shadow out there in EM Barclays is worried about?
I think really the threat of hikes returning to the table. It's something that we definitely need to consider in 2025. If you look at the historical experience, there's this natural tendency for the market to look for hikes ahead of the end of the cutting cycle. And typically in soft landings, the cutting cycle and the pause that follows, it's much shorter than in recessionary periods. So that implies that in 2025, we need to be thinking about this. And if you look back at the soft landings of 98 and 95, there was some concern over energy inflation, but core inflation actually declined between the last cut and the next hike of the next cycle. And so while the Fed's mandate is more symmetrical now, there's more relative weight put on unemployment. I think if you had that come back to the fore, and certainly it's something markets are thinking about, that would be very negative for EM.
Skylar, I got to run on breaking news. This has been great. Don't be a stranger. Skylar, if you're in New York, we have to do an extended Skylar Montgomery-Koning interview, FX strategist with Barclays. Thank you so much, Skylar.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
She was outstanding the last time she was on. She has to put up with Brian Belsky on a daily basis with BMO Capital Markets. Their senior economist, Jennifer Lee, joins us. Jennifer, just open question after the pageantry of the last 3-4 days. What are you writing about this morning? What is the Jennifer Lee focus on a post-inaugural Tuesday?
Well, good morning, and thank you very much for having me on. And I still love Mr. Belsky. This morning it was all the focus was on, of course, the U.S. dollar index and the volatility in the currency market. And that was in sharp display, of course, after the shock comments that he was made, almost offhandish. I was sort of wondering last night, would he have brought up tariffs if he wasn't asked? Legitimate question, obviously. And I was talking to myself, and I was thinking, why was I surprised? He said he's doing everything that he said he was going to do during the campaign. So, this shouldn't come as a shock. It's just whether or not it's going to come to fruition. And that's anyone's guess at this point.
What will Canada do? Does the Bank of Montreal first of all, does the Bank of Montreal have any insight whether the Canadians can outlast the Bruins? I mean, we'll have to see. I haven't said that in like 8 years. No. But Jennifer Lee, how will Canada respond to tariffs from America? Do you have any perspective there from the Bank of Montreal? This is more coming from the political side. All the provinces have gotten together, and all but one has, everyone's talking about retaliation and having also targeted tariffs as well on U.S. products. Again, it's we're gonna have to see how this plays out. It's all about the art of negotiation, as President Trump is always talking about. Again, I don't know. I'm not sure whether or not we're going to see. From the U.S. side of things, 25% tariffs on all U.S. or all Canadian products. I call it like the W5, right? Like the WHO. We're talking right now about Canada and Mexico. When will this happen? Was February 1st a hard date, or are we just going to talk about it first? It's just throwing it out there as a possibility. The whereof is like the WHO, and how this is going to play out, especially again. Will there be a lengthy period of negotiations? And are we targeting every single thing? Or are we only looking at, are we looking at all Canadian products, or are we targeting certain ones only? And these are all questions that need to be answered before we can figure out what we are going to do. Good morning out on YouTube from London, Ontario, which is the absolute, I'm speaking as an ugly American, is the absolute epicenter of good ice hockey and also exports to the United States.
Exports. So Jennifer, you're based in Toronto there. What's the feeling in Canada, in Toronto, about maybe some of what you guys could do, what Canadians could do in terms of on tariffs on your side?
So it's overall, obviously it's a feeling of unease. This is something that, nobody wants, obviously. The U.S. is the destination of 75% of our exports. And we import, most of our imports, come from the U.S. as well. And from the U.S., most of the U.S. exports head to both Mexico and Canada. So this is like something that, that is not something that we would relish. But in terms of preparation, I don't know if there is a set plan right now, but almost just being prepared for much slower growth than what we have penciled in right now. We've got just under 2% penciled in for 2025 GDP growth for Canada this year, and of course that could be potentially erased if we launch into a protracted trade war with the U.S. And again, it will depend on what products are targeted at what, is it going to be 25% for a long, long time? There are a lot of unanswered questions, so we don't know how this is going to play out. There's so much uncertainty. And this is what also makes, by the way, if I could just segue, this also makes, jobs for not only economists very difficult, but it makes jobs for central bankers extremely difficult as well. Whether or not they're going to tighten, or they're going to hold, or they're going to cut, all things are on the table right now.
So I guess two of the themes coming out of President Trump yesterday were migration policy, immigration policy, and the tariffs. Both some economists say could be quite inflationary. How did you hear anything yesterday that maybe changed your thoughts of the U.S. inflation outlook?
No, just again, there was some relief, obviously during his inaugural speech when he did not mention tariffs. And but at the same time, we do know that tariffs are inflationary. It's going to be the U.S. importers that are going to be bearing the cost initially, and then they're going to probably pass it on to the consumers. In terms of the immigration and the migration, first, obviously he's going to be targeting the illegal migrants, the criminals, but in terms of broader, how much further he's going to go, it's going to have an inflationary impact because of the labor market. And we know how dependent the U.S. agricultural sector is on illegal citizens and construction as well. So we see those workers unable to work or not able to work. That could put a lot more tightness on the labor market, means higher wages, it means higher inflation.
Jennifer, thank you so much. Jennifer Lee with a brief there on tariffs with unique perspective on Canada from BMO Capital Markets.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Our ecumenical tradition is to get as long a conversation as we can with Lori Calvasina. She read Graham Dodd and Cottle on the long at the University of Virginia ages ago. Is security analysis dead? Is everybody turned into a strategist?
Well, I think there are a lot of people who try to do my job for me. To some extent. But look, I think we are in sort of a more macro-driven world at this point in time, and I think this is going to be very much a year where the top-down tailwinds are informing a lot of decisions.
So from where you are, is it an active management stock selection year, particularly in your expertise of mid-cap or small cap, or is it an index year?
Well, I'll tell you what's fascinating, Tom, and often you will see funds flows turn in January, but we actually saw back in December, we started to see some inflows to actively managed funds in both small cap and large cap US equity funds emerge. Now that has occurred alongside passive outflows, and that hasn't sort of taken you into negative territory in large cap. You have seen overall negative flows in small cap, but it's really, really interesting to see that divergence. So far, the people who buy funds seem to be betting more on the stock pickers right now.
We had the inauguration yesterday. Did you guys change your outlook for risk assets for stocks based upon this new administration, a new Congress being seated? A lot of people feel like animal spirits on the economic front, maybe you're being loosened a little bit.
Yeah, I think what we did when we put our year ahead outlook together, and we did this around Thanksgiving, so we already knew the outcome. And we had been sort of updating our models heading into that well ahead of the November election. But what we did do with one of our sort of 5 sets of back tests, we were able to more discreetly model in the political environment. So our political back test actually, I think it's like around an 11 to 12% type annual return we added into the targeting mix. But that's the return you typically see when Republicans Republicans run the White House, the Senate, and the House. And so we thought that sort of did a good job of capturing the idea of a better animal spirit environment, better vibes, and a more kind of business-friendly climate.
So how do we think about it for 2025? One of the areas that I feel like there might be a risk to the market is maybe even more dependent than usual on earnings. Earnings really need to come through because I don't think the Fed's going to do a whole lot for us in 2025. What's your concern or confidence in the earnings outlook?
Well, so look, I've been lucky. The rate strategist that I work with has been calling for an early end to the cutting cycle for about 6 months now. And so he did finally just pull out the January cut, but the January cut was the only one he had in this year for quite some time. So what that translated to for us is in our valuation model. So this is another one of the 5 things that goes into our target mix as we come up with a target PE and look at that in the context of our earnings forecast and then get a fair value for the S&P. So bottom line, because of his Fed view, he also was pretty aggressive on the 10-year yield. We haven't really had any multiple expansion baked into our outlook, and I think that's the right answer.
Lori Calvasina with us, folks, with RBC. Thrilled she's here today, an extended conversation. Is a mid-cap still a mid-cap, Lori Calvasina? I got off the Vanguard platform. Palantir, Amphenol, Welltower, Motorola, Constellation. In a bull market, if those market caps go up, do the mid-cappies become more large cappies?
I think so. And look, I've covered small and mid-cap stocks for a long time. What's always been apparent to me is that mid-cap managers don't really live and die by their benchmarks the way that, say, small-cap managers do or large-cap managers do. They tend to be sort of benchmark aware, but don't really get caught up in these same market cap bands as
So
other
how do you
folks.
buy mid-caps? I mean, you're a strategist. I get that.
Yeah.
I don't want to ask you individual stocks. But then, are you looking at free cash flow? Is it revenue growth? What's the game for you?
I tend to not look at free cash flow just because I find databases don't do a good job of allowing me to model. It's very lumpy data. The forecasts are very, kind of messy. PMs love to look at it, right? It's something they live and die by, but as a macro person, it doesn't really work. I think we tend to define it in terms of market cap. I think if you want to go from like maybe 10 up to 50, that's a pretty safe, kind of range that I think most people can live in. But some people will tell you it starts a little lower, and a lot of people will let those names ride, right, and take them a bit higher.
Leadership in a market, Lori, it just seems like as long as we can remember, it's been technology driving these markets higher. Do you believe in market leadership? And if so, do we have tech still as the leader in this market?
Well, look, I'll tell you, Paul, I've been in the broadening camp, but I would say, by a centimeter, not by a mile. I do think this broadening thesis has become one of the most consensus things strategists have talked about coming into this year.
Are you observing it?
You can see it to some extent, right? But every time I have a weekly, and every time I update my charts, right? Like one week I'm saying growth is fighting back, and then another week I'm saying the value finally looks like it's trying to assert itself. So it's been very, very choppy. And I think there are good reasons to rotate. I think you've got valuation problems in the mega cap growth names. I think you've got crowding problems, and I think you've got decelerating earnings growth. And I think there is an itch in this market among PMs to rotate. But relative PEs of Mag 7 versus rest of market is a function. It's really tracking very closely relative long-term earnings growth dynamics. And Mag 7 earnings growth keeps surprising to the upside. So I keep telling people, that the case for the rotation, it's there, but it feels like the rest of the market is just whiffing on its opportunity and just can't reclaim that earnings leadership.
What are some of the sectors that screen well for you guys these days going into 25?
I think financial still has some room.
Okay.
I don't think it has as much room as it did. I think the capital markets names are getting expensive, but the banks, insurance companies still look pretty good on valuation, have good earnings revision trends. And I think financials in general, you've got a lot of policy tailwinds.
Right.
You don't really have any headwinds. Services looks really good. So you've got a lot of big tech type names in there. They're more consumer oriented. Again, I think more policy tailwinds than headwinds, good valuations, good revisions. We upgraded that one back in December and got a lot of good feedback from investors.
So and this is great with Lori Calvasina, folks, because she's from a distance on Mag 7. How do you perceive Mag 7 when I see Delta Airlines, surprise, Schwab today, surprise? Why aren't I going to get surprises from Mag 7 and everybody goes on their concentrated portfolio way?
What I've been seeing with the Mag 7, if I look back over the past years, we'll kind of go into earnings, right? And the banks come in and they have good numbers, and then you'll get some of these other cyclical kind of overlooked parts of the market working. And then you might have like one of these Mag 7 names kind of stumble a little bit, and it feels like in the middle of that reporting season, you're seeing the leadership shift and the earnings dynamic shift. And then I feel like all the worker bees around Wall Street go back after reporting season winds down. You know, they go to conferences, they've had all their callbacks, they go, you know, on their bus tours and things. And suddenly I notice the Mag 7 numbers start coming up again. And so it feels like in the moment, you know, there's a reaction to fade it, but when people really start to give it some serious thought and reflect, the strength comes back. It's a really, really odd dynamic, to be fair.
Tom and I have been talking a lot about ETFs. How does that impact your world as a strategist? Like when I was on the sell side, it was mutual funds and hedge funds.
Yeah.
Those are my clients. Do I now go see ETF managers? Do you go see ETF managers?
I don't see ETF managers per se, but a lot of my hedge funds will use ETFs or ETF-like instruments. And then if you think about sort of not so much the actively managed funds, occasionally maybe they might, you know, buy something like a biotech ETF to put cash in, or a small cap manager might buy an IWM, you know, type instrument to put cash in. That's very rare and few and far between. But generally, you know, you'll see sort of the wealth management community, you know, does sort of defer to ETFs. So they care a lot about sector calls. I think that, you know, sort of wealth management type money moves a little slower. You see big reallocations at the beginning of the year. But the hedge funds, you know, if I think about my small caps, hedge funds have been dialing up and down their bullishness on small caps when they've been dialing up and down their Fed dovishness. And then to some extent the election morphed into those trades at the end of last year. So they're playing, they're not the only instruments they're playing, but they do an awful lot of it.
Are we going to see roll-ups? I mean, nobody in the room is old enough to remember this, but there's like every 8 or 9 years in the old days, industries would go through this mental fake M&A phase where everything would roll into one company. Are roll-ups dead, or is that going to be the catalyst for the Calvasina world?
You know, I honestly, from my small cap PMs are a great read on this because, you know, they want their companies, right, to be bought. And then they also want new, interesting supply to come in. So they have their ear to the ground on this issue. I've not been hearing from them so much about roll-ups. I've been hearing more interest from them on divestitures, like with the bigger cap companies spinning some things off that might prove to be, you know, sort of interesting opportunities for them. That's where I've heard more conversation, to be honest.
Interesting.
Do you expect
that's called a bolt-on.
I know.
I learned that.
Okay, very good.
I read the Duke Business Journal this week.
Exactly.
It's a bolt-on.
Do you expect bigger, better, more IPO activity this year? I've heard the Jamie Dimons of the world and Brian Moynihan's talking about that. Do you expect to see that? I mean, you got your ear to the ground there.
Yeah, and look, I've been reading through earnings call transcripts. My team and I, and last week it was mostly financials, and we're certainly seeing, you know, a lot of optimism around both IPOs and M&A. And I do think there's some pent-up demand. I mean, they're talking about the pipelines. There were some indications in the commentary last week that things are getting started, and certainly we all see the announcements, you know, when we come into the office every morning.
Yeah, but do you have to IPO? I don't mean to interrupt, but we're out of time. Do you have to IPO anymore? Can't you liquefy and make gajillions?
I think
like Paul Sweeney gajillions by not IPOing now?
Well, I think there are alternatives, to be sure, and I think that's one of the things small cap managers struggle with is that, you know, sort of
they can't get access.
Well, the lack of size appropriate IPOs, right, and that a lot of things that come out are too big for them to buy. Again, going back to our mid cap or large cap type discussions. Look, I think that certainly the activity has been heralded or, you know, anticipated. I'm sort of telling people I'm optimistic, but they've got really until 2Q to pull it off, or people are going to be skeptical it's ever coming.
This is great. Come back. This is great. Lori Calvasina, our extended interview. It's 9 o'clock hour. She's the RBC Capital Markets.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
The food in Davos, Happy Valley, this is really not reported, is horrific. The great reason the J.P. Morgan cocktail hour, which is usually Thursday now, maybe it's Wednesday, the J.P. Morgan, they bring in the Horse d'Avours from like London or Milan or whatever.
Very good.
The only place you can get a decent dinner in Davos is the Postli restaurant. And I mean, the hitters, this is where they stay.
Okay.
It's the Morisani Schweizerkopf. It's like the hotel because you can actually have decent food and not leftover cold pizza. He's never had leftover cold pizza in Davos. Joining us, Dan Tannebaum from the Morisani this morning, of course, with Oliver Wyman as well. Let's cut to it, Dan Tannebaum. The president will do a virtual with people like you up Happy Valley. What will they listen for from Donald Trump?
Well, Tom, I think people are wanting to hear more specifics about how President Trump's trade policy and foreign policy agenda will work out. We obviously have gotten a preview over the last few weeks and in his inaugural address yesterday, as well as the evening press conference. But I think whether it's more of the same in terms of kind of threats for kind of trade deals or anything new, maybe there's another country he wants to invade. But right. I think there's certainly an air of pessimism until we understand more specifics of how this policy regime will unfold. You're
double-barreled at Oliver Wyman. You've got the wonderful Hugh Van Steenis as well. When you toured together, what are you talking about this new era of Trump in Europe, and of course the challenges with China? What do you and Hugh focus on?
Well, and Hugh and I had lunch today. He sends his regards. We're focused on really trying to understand how this new world order unfolds. You've already seen the new Trump administration threaten tariffs. You've seen retaliatory tariffs threatened by some country. And there's a lot of nations and companies that are frankly worried about being collateral damage. So really trying to understand whether the unintended consequences of some of these policy moves are really baked into the calculus.
So how do you feel, what's the feeling in Davos about maybe just global trade going forward over the next 4 years? Are people rethinking the nearshoring, friendshoring, that type of thing?
I think there's cautious optimism. I don't think there's any immediate change in nearshoring and friendshoring, but I think certainly the posture and change from the Biden to the Trump administration is a marked one in terms of how trade-related issues are settled. So I think there's certainly a view that this administration is more pro-business. However, the means with which they attempt to push that agenda could have some potential consequences down the road.
So what's the feeling there in Davos about this whole tariff situation? Because you see, I guess there was a little bit of relief in the market that President Trump did not announce tariffs on day one, that in fact he will study them and maybe Canada and Mexico will be first. What's the feeling in Davos about how global kind of CEOs should react?
Now, and being with a lot of global banking CEOs today, look, we all had practice in the first Trump administration. So I think people are being careful not to jump to any conclusions based on some of the statements he makes until we really start to see the policy shakeout. And that's really important, is that the market not overreact to some of these statements as we begin to reacclimate essentially to the tenor of this new administration.
Dan, with the context of, we've got a minute here, maybe 2 minutes to go into it, your expertise on sanctions, are we beginning to affect Mr. Putin and Mr. Putin's Russian domestic economy?
So that's the question. The sanctions that President Biden imposed a week ago Friday were fairly significant in further restricting access for countries to buy Russian oil by beginning to close the loophole that allowed certain legal purchases. Now, there's actually a moment for the new Trump administration to leverage authorities that the Biden administration imposed at the end of 23 on secondary sanctions by really trying to force third country actors that continue to trade with Russia and the US to make a choice more aggressively. And those sanctions cost very little to the American taxpayer versus military aid and other sorts of aid that are provided. So there is a certain mechanism that can be applied. And, with Russia, it was always going to be the long game in terms of sanctions to really isolate the economy. But there is more that can be done, and there's more that could be done in the coming weeks by the Trump administration.
So, Dana, just real quickly, is there an expectation that this Trump administration will move to end this war in Ukraine quickly?
Well, I think you've already heard President Trump begin to say the challenge is in ending this quickly. Whether President Zelensky agrees to whatever terms exist. I mean, this is not the simplest thing to end with the snap of fingers. There's a lot of questions on the table in terms of what peace ultimately looks like. But I mean, reinforcing the Western coalition. I mean, in the inaugural address, there was no mention of Ukraine.
Yep.
President Zelensky speaks here this afternoon in Davos. And it will be helpful to hear beyond what Scott Bessent said in his confirmation hearing next week, how sanctions will play a role in this foreign policy agenda.
Dan Tannebaum, thank you so much. With Oliver Wyman from Davos this morning. Perhaps we can catch up with him on the backside of Davos as well.
This is the Bloomberg Surveillance Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.